Hey, good morning. This is Mayor Valensky with Driving Markets. Good morning. Okay, let's start off. Before we discuss markets, let's start off with a couple of housekeeping rules. Number one, if you're looking to trade or you are trading, only trade with a regulated firm. Okay, if it's in the UK, you have to trade with an FCA regulated firm. And if it's in Europe, you want to trade with one of the regulations within Europe, whether it's SISEC or German regulation, etc., etc. If it's in the States, obviously you have to have a US regulation. The regulation is there to protect you and to make sure that the money that you have in your account is segregated. Segregated means that it's separate from the actual company's money. So if the company went bust, then your money is in a separate bank account that belongs to clients. So segregated client account, which means that that money belongs to the client. So if the platform or the company providing the platform goes bust, then your money is protected. How's it protected? It's protected by the bank itself, under obligation by the regulator, and also by the regulator themselves, which means that you can withdraw your money or get your money back within a certain period of time if that company was to go bust. That is the beauty of regulation. All the non-regulated companies do not return your money. They do not segregate. They don't separate client money from their own money. The money that you deposit with a non-regulated firm, as far as they're concerned, belongs to them, and then you will never get it out. So in that case, it's considered a scam. So stay away from scammers. Yesterday, I had a particular client who's been scammed so badly that he wants me to send over my personal ID and KYC and all of the necessary documents to prove that I am who I am, which means that we've got to such a stage in scamming that the clients are suspicious, and I don't blame them, because there are so many scoundrels out there and so many thieves that have just scammed all the money from private individuals. I get it. Okay, let's talk about markets. So the markets are at the moment very, very nervous, and you can see by the jumpiness in the indices moving around. You've got two factors. Number one, you've still got a global pandemic, and what impact is that going to have on economic recovery? And number two, you've got energy prices. Now, energy prices are just going through the roof. I know, for example, in the UK, you've got 50, 60, 70% increase in energy prices to the degree that a lot of companies have actually gone bust because they can't pass on that rise in the cost of energy, and therefore they bought it at X amount, they're selling it at X amount, but it's now costing them 70% more to buy it, so they've actually gone bust. So in the UK, the price of energy has gone through the roof, which means the cost of living is going up as well. Which brings me on to the price of oil, which is one of the fundamentals in regarding energy prices, and that's causing serious concern. So the jumpiness in the markets short term is which direction are they going to go, and what impact is higher energy prices going to have on the cost of production and overall inflation. We are going to see a rise in inflation. Be absolutely certain inflation is going to go up. The question is, will central banks in Europe, the UK and the US tolerate an increase in inflation without increasing too much interest rates? I personally think that they will do a very, very gradual rise in interest rates, because a significant rise in interest rates could whack the economy, and that would be a significant downturn in overall global growth. So you've got to watch out for energy prices, and you have to be very aware. When that comes to trading, if you're a day trader or short-term trader, of course you're going to have economic news which is going to impact you on a daily basis, and the markets are swinging around, and therefore you want to be very, very careful when you're trading, which I always say on a daily basis or regularly on YouTube. You have to be aware that long-term markets, when I say long-term, I'm talking about 5 years, 10 years, markets generally will go up, because the nature of humans is to invest, and to invest for long-term growth, and that investment comes from the pocket of the guy in the street into the big funds, and the big funds go and buy shares, investments, etc., etc. So there's quite a long YouTube this morning. I apologize, there's quite a lot to talk about. If you need anything, you can contact me on Google, LinkedIn, or WhatsApp. I do encourage everyone to subscribe to the YouTube or to Instagram, and that way you're fully covered, because I can't remember to send an individual YouTube to every person in the marketplace. And remember, only deal with regulated firms. If you need any assistance, please call me. This is Mayor Valensky in Driving Markets. Have a good day.